Hi, this is John Lane with TaxSaleList.com. Today we're going to talk a little bit about the benefits of tax lien investing and why it's attractive in today's market. The reasons you want to look at investing in tax liens are relatively simple. In today's investment world, there are a number of reasons why tax lien properties and tax lien investments should be considered. The primary ones are the rate of return you make, the risk profile of a tax lien investment, understanding the underlying real estate market that exists today, and the profit potential. First, let's consider the rate of return. In today's market environment, tax liens give a much higher return than a number of the alternative investments that are available. The average life of a tax lien today is less than 2 years. The average return on a tax lien today is in excess of 10%, and in some places it's more than 20%, whereas the alternative returns out there are much less. For example, 2-year U.S. Treasuries yield 0.5%. A 1-year certificate of deposit yields about a 1.4%. 2-year corporate bonds, AA rated, yield about 1.04%. And the return on the stock market over the past 10 years, including dividends, has been a negative 2%. Most people don't understand the risk profile of tax liens. You have to understand that the vast majority of tax liens will redeem, meaning that you'll be paid back your money and earn a high interest rate, a much higher rate than the alternatives that you could invest in. Residential properties redeem more than 90% of the time, and other improved properties are close to that rate. When a property does not redeem, you acquire that property for around 5 to 15% of market value, depending on the state and the redemption period, which means your returns will be much greater than 200%. The major risk in buying a tax lien on a property with no value, which is easily avoided with fairly basic due diligence procedures, most of which can be done online today. You have to make sure the property you buy has an intrinsic value that is at least 5 times what you will invest. Since most property taxes run less than 2% of market value, that's a relatively easy thing to do. The underlying real estate market that exists today is a great reason why you want to be buying tax liens. First of all, most people are terrified of the real estate market at the moment due to the major declines that have taken place over the past 2 years. And this is really a huge reason why you should be looking at tax liens. There are a number of reasons why. First, it's more than likely that the majority of any price decline in the real estate market has already taken place. 2, there are fewer participants in the tax lien market now due to the fear factor of the real estate market. But if you look at it realistically, if you end up acquiring a property through a tax lien, your acquisition cost will be around 5 to 15% of current market value, which gives you huge price protection to the downside. And if the lien redeems and you don't acquire the property, the real estate market isn't affecting you. Instead, you're making an interest rate that's 4 to 5 times what you would make in other investments. Okay, let's talk a little bit about the profit potential of tax sale properties. Let's assume a property is worth $100,000 at current market values. You'd acquire that property in most tax lien sales for somewhere between $5,000 and $15,000. That would mean that you would have a potential profit of $85,000 to $95,000 if you sold the property at 100% of market value. That would be a return of between 1,700 and 1,900%. Now let's assume you wanted to sell the property quickly and you decided to sell it at $70,000 because you wanted a quick sale. That would be 70% of market value. And in today's market, if you list a property at 70% of market value, you're going to get a quick sale. Your return then would be between 1,100% and 1,300%. Now, what's the other alternative? The other alternative is the property redeemed. And if that happens, you'll still make a return from the interest rate that is somewhere between 5 and 10 times greater than alternative investments. Okay, let's sum up. First of all, tax liens pay a much higher return than alternative investments. Number 2, the risk, when properly done, is much lower than most people realize. Number 3, the real estate market has already suffered a huge decline, so buying at 5 to 15% of current market value gives you a huge price depreciation protection, and further price depreciation should not be large in light of how much prices have already gone down. And finally, tax liens give you a profit potential when redeeming of anywhere from 4 to 5 times other alternative investments, and if the property does not redeem, you have a profit potential that can run over 1,000%. If you'd like to learn more about tax sales, click the link below in the description section and register for our free workshop, An Introduction to Tax Sales. This is an informative, no-hype hour about how tax sales work and how you can profit from tax sales. This workshop is based on over 20 years of experience in the tax sale business and the acquisition of more than $172 million worth of tax sale properties. We want you to learn the facts, not the false promises that some people give you. I appreciate you watching the video. If you liked it, be kind enough to leave a good comment or give us a thumbs up below. Thanks a lot and have a good day.